SLTY is finally out, and I wanted to make a video where I go over this fund. I already made a video about a week ago just announcing SLTY, going through the prospectus and kind of giving a summary of what SLTY could possibly do, how it could possibly look like. I was wrong on some points and I was wrong on other points. And now that the fund is out, in this video we'll be giving a first glance at SLTY. Today is the second day that they're out when I'm recording this video, but when I'll be posting this video, it'll already be out for a few days. If you stumble on this video, it might help you understand the fund better, answer some questions, and clarify some things. So let's just get into it right now. Let's just look at the fund. It's really just a first look video, so we're just going to go through it together, talk about it a bit, and I'll give my opinion, whatever. And like usual, it's not financial advice at the end of the day. Please do your own research, figure out for yourself if you like this fund. I encourage everyone to also go read the prospectus and go through the fund on their own. So SLTY, YieldMax Ultra Short Option Income ETF. When you're on YieldMax website, when you go on our ETFs here, and you go on Ultra ETFs, like I said in my first video about SLTY, they added it in the same category as ULTY. So now we have ULTY for bullish people, and we have SLTY as a short ultra income ETF. So we have our bull version, and now we have our short version. So we really have kind of a hedge here that if we hold both of these in our portfolio, they're not holding the exact same thing. It's kind of cool that you can get that ultra income on the upside, and now you have the option as an investor to also get that income on the downside. Obviously the yield is undisclosed for the moment because we haven't had our first distribution yet, but the fund came out at 50 bucks. So now if you just look at the price, yesterday it actually went up and currently it's down. And the reason why it's down is if we look on the right here, today is a big green day for the market. So this is shorting a bunch of stocks. And since they're shorting a bunch of stocks, even though these are different stocks and they're not the S&P 500, when the market is having a good day, usually everything goes up as well, as long as they're big cap companies that have a good impact in the overall US economy. When we have a nice green day in the market, it should push most of the stocks up. So this is probably why we have a down day today on SLTY. And when we quickly look at ULTY, ULTY is actually up 1.8% as of today. So SLTY is down 1% and ULTY is up almost 2%. It's going crazy right now. I don't know what's happening. We were basically canceling out the volatility. This one is down 1% and this one is up almost 2%. So in total, we're up 1%. But on some days, you're probably going to be down more on SLTY and be up less on ULTY. And maybe on some days, you might be down on both of them if SLTY is shorting some stocks that ULTY doesn't hold, and ULTY is buying some stocks that SLTY is not shorting. Then we might see red days on both, and we might see green days on both of these. What is SLTY according to YieldMax website? So the YieldMax Ultra Short Option Income Strategy ETF SLTY is an actively managed fund that seeks to generate weekly income. So there you go, weekly distributions, by taking short, quote unquote inverse, exposure to a portfolio of 15 to 30 US listed equities and selling options on those securities. So what they're doing is they're shorting stocks and then they're applying options on top of those stocks that they are shorting. It's the same thing as ULTY, but it's the opposite. ULTY is buying stocks and then they have an option overlay. They are shorting stocks and then they have an option overlay. And their strategy, we'll go into it in a second, is exact same strategy as ULTY, but it's reversed. So ULTY is doing callers, SLTY is doing short callers, so exact same strategy. So good news for people who are a fan of ULTY. If you're a fan of ULTY, then you might like this one more, because if you already understand how ULTY is working and you've been satisfied with ULTY and you like what they're doing, you like the collar strategy, it's something that resonates with you, with your investment portfolio, etc., etc. You want to reduce the volatility of your portfolio by adding some short collars on top of the collars that you have already with ULTY, then SLTY could probably be a very good option for those types of investors, for that type of investor profile. The primary objective, obviously we are in the ultra option ETF category of YieldMax here. So the first objective is to seek income. So they're going to be buying and selling and whatever, applying those option strategies, those short callers with some reasonable price to have some breathing room to get some upside as well. But they're going to be pretty aggressive with their strike prices and they're going to be aiming to get as much income as possible. And that's obviously going to be the primary goal of SLTY. SLTY is not a growth investment. You're supposed to reinvest as much as you can and compound your shares as much as possible before thinking of using the distributions to go fund your lifestyle and buy some random things. Secondary investment objective is to seek inverse exposure to the share price of a selected group. So that's the growth portion of it. So let's say you're shorting MSTR If MSTR goes down, SLTY is going to go up. And that's the secondary outcome of this fund. Obviously, if they're shorting a bunch of stocks and all of these stocks are crashing, then SLTY is going to go up. So you might get some upside on SLTY from there. That's not the primary goal of the fund. They are capping the growth potential with those short callers. Really, the primary goal of this investment is income, first of all. So for the fund information, the ticker is SLTY. It came out on August 20th, but it was actually tradable on August 21st. The expense ratio is 1.24. Obviously, this is going to be high because it's an actively managed fund, so no surprise there. The current net assets under management is pretty low if you compare that to ULTY. ULTY is in the 3 billions and this one is in the 3 millions. So I'm curious to see how this one is going to grow. Is it going to hit 1 billion pretty fast? Or I feel like people are not going to buy into it right now. They're going to be waiting a bit, seeing how this one performs, especially with the inception price of $50 US. I think that this is pretty high. And I don't know why they went with that. Maybe just to have some breathing room. And I feel like they always come out with new funds at $50 anyways. Right now, it's kind of the norm for YieldMax. People love ULTY because it pays a high distribution rate and the shares themselves are cheap. It doesn't really make a big difference, but I feel like just on the psychology side of it, people seem to prefer a lower price so they can have 1,000 shares on their portfolio, even though if they have 1,000 shares that pay 10 cents, it's the same as having 2,000 shares paying 20 cents, you know? So now let's look at the holdings, and this is where I was wrong in my first video, where I was talking about SLTY. I was saying that, they're probably going to be having some synthetic exposure. But when you actually dig into the holdings, you see that that's not what they're doing. And what they're doing is they're actually shorting stocks and doing short callers on those stocks that they're shorting. These are the holdings as of yesterday for SLTY. And as we can see, the top holding right now is cash. I don't know why the weighting is 184. I think they probably made a mistake on their spreadsheet on their website, but that doesn't make too much sense. But anyways, it seems like they're pretty cash heavy. Their top holding right now is MSTR, and they're shorting 700 shares. When you have a negative amount of shares, it just means that they're shorting it. So instead of having synthetic exposure or buying an inverse of MSTR, they're straight up shorting the stock. So they're shorting MSTR, they're shorting Applied Digital Corp, MongoDB, Bloom, Abercrombie and Fitch, Mara, GitLab, Bill, Aster Labs, Lululemon, RH, Mphase Energy, CrowdStrike, and Inuit Inc. And these are their holdings as of now. So as of now, they actually have 14 stocks, and then their 15th holding is cash. Now, just to understand better what they're doing, I just filtered out their MSTR holdings to see exactly how they're working out their strategy. So it's very simple, and I'm not going to spend too much time on this. So like I said, they're shorting MSTR, and then 100% of their shares are covered by puts and calls, and that's where you get a caller. It's because you have a put under the price and you have a call over the price, and that's why they call it a caller, probably because it's just wrapping up. It's protecting on one side and it's generating income on the other side. So here, as you can see, they're covering 100% of their shares, selling 7 puts at 325, and they're buying 7 calls at 375. Currently, MSTR is up. That's one of the reasons why SLTY is down. Since MSTR is up today, this is going to push the price of SLTY down for the portion of MSTR that they are holding. And the current share price is 348. So let's just put it here, 348, just to remember. So what's going to happen here is it's the same thing as selling a call. When you sell a call, you get the premium right away. But if the stock blows past the call, then your upside is going to be capped, and that is the risk of selling a call. It's the same thing for selling a put under the strike price. They're getting the premium right away. So here, if MSTR crashes and goes under 325, they're going to be stuck selling MSTR at 325. Even though, for example, MSTR crashes all the way to $300, they're going to be stuck selling the share at $325. So they're going to be collecting premium, and as long as MSTR goes down but doesn't go down under 325, that's where they're going to be able to generate as much money as possible. And then the call at 375 is to protect themselves from the upside. Let's say MSTR just blows up. This is going to mitigate the risk. So since they're shorting MSTR, it blows up to $400. Even though they're shorting here, they're not going to be destroyed. So they're going to be allowed to buy the stock at $375, even though it's way past that. So it's going to be protecting the upside. Basically, for the loss, they are protecting themselves. So the maximum loss they could take is MSTR blowing up to $375. And the maximum win they could take is MSTR dropping down to $325. That was it for the video, guys. I really wanted to give a first look at SLTY and give my opinion on this and kind of go through their holdings. As we saw, it's pretty simple. Complete opposite is ULTY. ULTY is doing callers. SLTY is doing short callers. I'm curious to know what you guys think. Let me know in the comments. Do you think this is good? Do you think SLTY is good? Personally, I think that yes. because ULTY proved itself that in certain market conditions it can do very well. So I think that it is just a matter of time for SLTY to get those perfect market conditions to perform very well. I think that it is probably too early to judge the new ETF. We'll have to see how it performs under different market conditions. I'm curious to see how SLTY is going to do on bullish market conditions. As we see today, we have a nice green day with the total market. Everything is up basically, and SLTY is down. Is SLTY going to be down every time we have a green day? If that is the case, that means that SLTY would be a good hedge in your portfolio to hold to reduce volatility. So every time we have a big green day in the market, most of your portfolio is probably investing into long-term bullish positions. So SLTY is going to be down and it's going to reduce the volatility of your portfolio. And when we have big crashes in the market, SLTY will probably be able to kind of compensate with the downside in your portfolio and help your portfolio not take as big of a hit. We might see SLTY also performing well under good market conditions. So I'm just curious to see what will happen in the future. And I'm curious to see how YieldMax is going to handle this. SLTY is not holding the opposite of ULTY, so that's not really correlated. Like they're shorting some stocks that ULTY is not holding. So yeah, I don't know. Anyways, we'll have to see. Like I'm very excited for this one. I think that this one will be very useful when we have big market conditions, we have bad news and everything. It's going to be a good hedge in the portfolio. And if you're an income investor and most of the things that you care about is really maximizing your income, it's always useful to have some hedging in your portfolio. Obviously, if you're a long-term investor, maybe not. All you want is growth. And when the market crashes, you don't care about volatility. You just keep buying more shares and it's more buying opportunity. Some investors have less tolerance for volatility and they don't like seeing their portfolio being read too much. They might prefer hedging a little bit in their portfolio. So I think SLTY could be wearing multiple hats in an income portfolio, and it could be a good fit for different type of investors. I just wanted to say thank you for the crazy support lately. As we can see, we recently crossed 3,000 subscribers. We're almost at 3.4 thousand subscribers, and I'm so excited. Like my goal is to reach 5,000 subscribers, maybe 10,000 subscribers. I have so many great ideas for future videos on this channel. Feel free to let me know in the comments if you guys want me to make videos about certain topics. It's always good to have feedback and inspiration from the people actually watching my videos and the community and everything. So yeah, guys, don't forget to let me know what you guys think about SLTY in the comments. And until next time, take care.